Hello, everyone, and welcome back to another. And this time we are lunchtime hour. Although a couple of minutes late, and that's not my fault. That's not my fault. Welcome, everyone.
What's going on, Neil? How's everything, man?
All good. I'm wearing some green today. Hopefully, that can help out the market. I don't know if it will.
How's the stock market today? I know yesterday was pretty brutal. Not too bad. Not like yesterday.
Now, yesterday was brutal, but then again, we had a couple of green days, so we're back to reality.
And Neil, just want to give a quick shout out to everybody here. We have everybody blaming me for being late. So what's going on? Shorty, Digo, Victor, Waldo, Finist, Linux. So yeah, thank you all for coming and joining us. We got an interesting hour for sure.
Yeah, I mean a lot of news. So apparently CoreWeave is going public tomorrow. I think you said that last stream, but it wasn't quite clear because I mean when you Google it, nobody
you were gaslighting me that it wasn't.
Because Google was gaslighting me.
It's been pretty quiet, right? Neil, I thought we would have heard more about it, especially the few days before. I was looking online, and most articles on it were 7 days ago, and I would have expected this to be a little bit more popular in it. But I don't know if you saw, Neil. There were some reports that CoreWeave plans to
yes,
maybe reduce their pricing and reduce kind of the shares they're gonna release this round.
Yep, that's exact. I knew you were going to say this, so I'm sharing this. I'm sharing this right now. It's quite crazy, no? That these things get released like a day before, so they are now likely to seek a valuation closer to $23 billion instead of the $30 billion that was originally targeted. I mean, one day before, that's quite a weird move, I'd say.
I think it's so weird, that this is where we're at in the AI market, that it's so hard to value. Like in one day, you can kind of change your valuation by about $7 billion. I think that's wild. And it's not like it's a $1 trillion company where 7 billion is only a small percentage. Here is a massive over 20% cut of its valuation in just a few hours, if these are true.
I mean, it's basically a Nebius less. If you take a Nebius, you remove that, and that's basically what has happened here. why do you think this is the case at the moment? You think it's because of everything that they released in their S1, all the talk about the reliance on Microsoft, less demand? What's the reason?
I don't. I think it's just the market volatility right now, Neil. Um, I think for them, it probably makes more sense to reduce that share amount. I think that's also discussed. I forget by how much they reduce the amount of original shares that they're gonna um, release this first round. And by doing this, I think it's going to create more of like a hype on the stock. If you have obviously less public shares, you're going to kind of have that arm momentum based out where it's like small floats, and it's going to allow them for in the future to really kind of scale up with the hype. They're going to say, hey, look, oh, look, our shares jumped from whatever dollars. It doubled in the past 6 months. Now we can even sell more shares. So I'm guessing that's going to be their overall thoughts.
Yeah, I mean, interesting. I don't know by how much they're going to decrease it, but I don't know from what I've been seeing, reading, it has a lot to do with just the concentration of the revenue that it's coming from Microsoft. What 61%? What was, I think, the number that was shared, which is pretty crazy. And then when you have reports that Microsoft again might be scaling back on some data center leases, expansions, the timing could not have been worse this week. But it is an important IPO, right? This is the first very, very big IPO in the tech space, in the AI space. So hopefully it does well. I mean, the reports were saying that it was 5 times oversubscribed. So I guess there is a lot of demand. So yeah, maybe they're playing 4D chess here.
Yeah, and Jordy was asking here, what does CoreWeave do exactly? I think the easiest way to think about it is kind of like uh maybe a simpler version of like your cloud server providers. They don't have kind of the full bolts and whistles and kind of all those software solutions like Google Cloud or Microsoft Azure, but they kind of have that AI infrastructure for the AI space and the cloud space. I think yesterday, Neil, both of us read it, the semi-analysis piece that came out yesterday, and semi-analysis actually did a ranking on what were some of the top cloud service providers, and they actually listed CoreWeave as the only ones who hit the platinum based on these rankings that they did. They mentioned that they want to upgrade these rankings on a multiple times per year, maybe every 3 or 6 months, regardless. CoreWeave was the only one that, based on various things that they look at, security, storage, other types of things that you are crucial in the cloud server space. CoreWeave was the only one. And pretty cool, Neil. In gold, you had Microsoft and Nebius and Oracle, which were pretty interesting to see that.
Yeah, no, I agree. It was unexpected report. I didn't like it came out of nowhere. Suddenly we get with this huge thing here, so we can actually go and see. So if you want to know the 4 offerings that CoreWeave provides, this is this. We will probably leave the link if you want to read it all. Lots of information about every single player out there, what they do, what they don't do, why one is better than the other. But yeah, CoreWeave going public is also probably going to have an impact on Nebius, since they're pretty close with what they're offering. So if a CoreWeave is suddenly going to be worth $50 billion after it goes public and the stock goes up in one day 50% or whatnot, if people start to compare it with other players and they see, oh, actually Nebius is on that list as well, not that far behind. Nebius is only $6 billion, might play a part in that as well in the coming days. But yeah, interesting stuff. This is basically what's going on right now. So again, I guess Broadcom is taking a hit more and more. I think we were quite spot on the comments made on Broadcom. AMD is actually down 3% today. So I wonder if the guy is going to come on and talk about our bet today, or maybe he forgot about it. But yeah, mixed results. I think the market opened extremely red, and then things recovered 1 hour or so afterwards. But yeah.
And here we go. Just kind of shout out to Renato and June over on your channel, Neil. Just welcoming in. And Sword wants to know, Neil, any thoughts? Have you thought of entering Nebius? I know you've been talking about it. I haven't talked to you since last time I thought, but I believe you still hadn't opened up a position, but it was kind of really top on the high list. And with yesterday's, Neil, the semi-analysis report, putting Nebius on gold, I think that's really strong, right? You kind of put it in that same ranking of as a Azure Microsoft solution. Did that create even more of an incentive for you? As obviously those guys have a lot more data than us on what's happening on the boots on the ground for there.
Yeah, no, that's exactly what I did yesterday. I basically switched my Disney position with Nebius, which now, I mean, it's 200 shares at the moment, and I'll try and build it up. I'll try and build it up. Eventually, it's very small at the moment, but yeah, I did like to see the stock go down yesterday, and that made my purchase a bit cheaper. But yeah, I wouldn't mind if it stays around $24, $25 for a while, so I can just accumulate more and more shares. And I think it's still, we are talking about it because we're talking about AI and semiconductors every single time, but I think it's still flying under the radar. The fact that it did get gold on that semi-analysis report is already quite good, because you're seeing a Nebius next to an Oracle and an Azure. People in that industry and maybe in Wall Street are probably going to start asking questions like, oh, where did those guys come from? And then the ball will start rolling. But of course, they still have a lot of work to be done this year, expanding, scaling up, and we'll see. We'll see what happens. So far, so good.
Yeah, so Neil, originally I didn't really care much about Nebius. But after this, it's like it's not going to be a blind buy, but because they put it so high in the list, like you mentioned, other people are probably going to do the same. It's like, okay, why are you putting them so high in the list? Let's kind of dig into them. So I think Nebius and CoreWeave are two that are going to be on my top watch list. Obviously, CoreWeave is going to be more, um, like you mentioned, oversubscribed, so it could kind of, that one could be more pricier. Um, but yeah, I think those two are interesting. And just a quick note, obviously, go read. Neil's probably going to post it on his channel or on the link. But semi-analysis, I think most of it is free to read. The parts that we shared are free to read, so it's not like we're sharing anything behind a paywall. They do have a lot of free information. Um, and within that free information, one thing that I enjoyed, Neil, was they mentioned that Google, even though Google was like almost dead set last in bronze, um, they mentioned that Google was evolving very quickly, and that they believe by their next ranking or so, Google can actually make it to either a gold or a platinum based on the overall momentum. So that got me pretty excited. As one of the things we've been talking about, Neil, right? It's like Google has been kind of a one that the cloud hasn't been much of a growth story for, or is one that's overlooked. Maybe that's the better thing. It's kind of overlooked. And if they are kind of moving on that great momentum, I think Google's going to start to see some great advantages in for investors.
Yeah, I mean, I agree. I think it's it's quite crazy, the sentiment today, especially around Google, but even the other players out there. It's insane. I mean, Google. If you really look at the business, and as we've said on Tuesday, if an OpenAI is worth $300 billion approximately, what does that make Google Alphabet? Like, OpenAI is 16% of the whole Google Alphabet company. It doesn't make any sense to me. Like, zero cents. But okay, I think the market in the short term can make 0 cents. And with the new releases from Google, I think they are making some noise in the AI space for sure.
Um, so let's see what were any questions you wanna
Or
you
just
oh sorry,
comments here.
Jeffries. Yep.
Yeah, there was a small price target change, I think from 130 or 135 to 120, um, citing AI challenges and actually Intel resurgence. So I'm like, okay, a win I take. I'll take the win for Intel. I'll take the small hit for AMD, but nothing really that changes my vision or my conviction or thesis on AMD at all. But I did think about this today with everything that we're hearing right now AI space, data center build out, slowing down leases, etc., etc. Do you think that's one of the reasons why AMD did not want to give us guidance this early in the year? Because they didn't want to jump the gun and say, oh, we're going to do X, Y, Z. Either it's too low or maybe too high, and then they're going to take a hit because it cannot be met.
I don't. I I don't think that's the reason, Neil. And I think these kind of data center cancellation leases are kind of overblown a little bit. Even the TD Cohen analyst kind of explained why he wanted to make the point, but he shared that. I'll talk a little bit about it. But first, with AMD, I think with AMD, Neil, we know AMD's AI revenue is probably going to be very light in the first half, because I mean, I don't think most people are going to be buying the 300 or the 325 MI 300. I think everybody's really saving up for the MI 350. So if and AMD would have given us a guidance for this year, and then most people try to maybe cut down that on a quarterly basis. So if you give us $10 billion of revenue, I'm going to expect you to do 2.5 billion every quarter at least. But if the first half is going to be so weak and you barely get like $1 billion or so, the market, I feel, will get up too scared. It will be too scared of kind of those numbers. It's like, how can you do 10 billion if this quarter you did 1 billion, next quarter you're doing 1 billion? So I think maybe Lisa Su is trying to be a little bit more cautious with the guidance. And once we get closer to the 350, if I still believe we might not get a guidance, Neil, but I know you said there is. If we are to get a guidance, I think it'll be closer to the 350 release where they can actually show those numbers.
Yeah, I mean, Lisa Su is playing this game very, very smartly, I think. I mean, yes, they're behind. They're behind NVIDIA. Okay, fine. But she knows how to play the game.
And Neil, actually, I want to talk about the data center story in a bit. But first, I like this question from June. So, June, any thoughts on Marvell? So, June, I know you follow Marvell as well, so I would love to hear your thoughts. But I don't know if I'm still. The reason I have been kind of set back a little bit on some of these ASIC solutions is after this GTC event, I don't know if I'm just too emotionally bullish hyped on Nvidia right now. So because of that, I don't want to cloud my thoughts on the ASIC market, on the third party competitors, because what I saw from GTC, it makes it seem like anybody dealing in the AI space outside of NVIDIA is pretty much done. And that's the I believe that's more of just the hype coming in from what I saw in the event. I'm waiting for that hype to cool down into me internally. But overall, I mean, the data center side for Marvell is growing. They mentioned this most recent quarter that they've seen the bottom on a lot of their core markets. Um, and the great thing is, this one is not as big of a player as Broadcom in the ASIC space. So the chances of them just even still growing, even with heavy competition, is a little bit higher, in my opinion, because they have such smaller market share. So long term, I'm still very bullish, but I now, with NVIDIA's GTC event, I put more of a yellow flag to a lot of these ASIC players. And again, I just don't know if it's because of the hype that I saw. I've gotten myself last week with GTC, so I'm waiting a few weeks. We're going to reread that earnings transcript and see how my thought process goes with Marvell at the moment. But June, I know you follow it, so would love to hear kind of your thoughts on it.
Yeah, I mean, it's going to be an interesting space, Marvell, Broadcom, in the next coming years with all of the new launches from NVIDIA, from AMD. See how they compete. I found this a very, very, very funny comment from Mark. I hope those rankings from SemiAnalysis are not like PC Gamer giving Assassin's Creed Shadows 10, 10 on 10. I didn't play the game. My brother actually bought it. I was like, how is it? And he said it's actually not bad. It's actually not bad. We've been playing the Assassin's Creed games since the first one came out. So I'll use his game because I'm not buying this.
Neil, I would love to hear your thoughts here on Digo had a question earlier when we started. Any thoughts on can you comment on Max, which is an equal weighted Mag 7 ETF. Everyone likes the 4 PE of most Mag 7 stocks and future stories. Good thesis. So Mags, I believe it's a round hill ETF, but pretty simple. It's just equal weighted with the Mag 7. I'm not sure what the expense ratio is. Um, Roundhill usually has about at least a 0.5 expense ratio. Um, but any thoughts on just like Mag 7 ETF overall?
I mean, it makes sense. I mean, it makes sense. It's, let me see if I can find it. So yeah, it's here. So we have an expense ratio of 0.29 actually for this one right here. Max Magnificent 7 ETF. Top holdings. Well, top holdings is basically this. So you've got Meta first, then Microsoft, Amazon, Apple, Alphabet, Nvidia, and Tesla. Interesting, no? You would have assumed that Nvidia would be number one, right?
I don't know how often they update this right now. So I
This is
mean,
as
they
of
update it
yesterday.
daily, yeah, but I don't know how often they like sell or buy shares. So, obviously, Meta Platforms has seen like a nice roundup in the past 3 months. I think it's gone from we saw that kind of crazy story, and kind of like Tesla and Nvidia have kind of seen the overall. If we think about December, so I don't know when was the last time they purchased, but I'm wondering if that's why there's a little bit more changes between the percentage holding.
Yeah, but I mean, yeah. Look, when you buy the S&P today, right, or whatever you buy, and these companies make up a lot of the market today, right? If these companies go up, the market goes up. If these companies go down, the market will probably go down. And here you just get way more concentration in those companies, which, to be honest, if you own 4 of those in your portfolio, why not just buy this and you have the other 3 as well? It would make sense. Yes, there is an expense ratio, and you have to be okay with, let's say, the rankings that they have. Although, let's face it, not such a big difference. Although, yeah, from Tesla to Meta, that's 7%. But Meta being number one, I wouldn't complain. Far from it, actually. Um, but yeah, it makes sense. To be honest, makes sense. I think if people ask, oh, should I buy the S&P or should I buy something like this, or maybe the semiconductor ETFs that we've been talking about, it's, again, it depends what you want exposure to. If you really want just semiconductors, then there is that other SMH, I think, is the ETF. If you want exposure to all of these big tech companies, then this one, in my opinion, is a bit better than just buying the S&P, right?
Yep, exactly. I think it all depends. I mean, if you hold all three, a 0.29 is obviously expensive for just holding 7 stocks, but it's not something that would really eat the bank, right? I was expecting more to 0.5 because that's typically what I see Roundhill do. So 0.29, it's not going to eat the bank, in my opinion. You're really not going to notice it. I kind of have like this equal exposure on sites with other 7 players, and you don't have to manage it. I think it's okay. And yeah, if you have equal bullish on all 7 stocks, then I don't see this as a bad idea. It's just, hey, look, I don't have to manage it myself. Someone else can do it, and I just pay a super small fee from it. Um, but yeah, and Neil, I actually want to go back to this with June. So when we were talking about Marvell, June mentioned that's fair. I think it's got a better chance at current prices to have more upside compared with Broadcom, but also more bullish, much more bullish on Nvidia. So June, that's 100%. I forgot to kind of think about the stock with Marvell sitting at $70 right now. I do believe it has a great chance of being a great investment and more upside. I also believe, June, that I would I think there's maybe a little bit more risk for Broadcom than for Marvell. So we might be in the same boat, but at the end, we're still so much more bullish with Nvidia. So I think it's fair. But yeah, the current prices of Marvell have me a little bit more excited, even though I'm still maybe a little bit worried about the ASIC space. But with Marvell at around 70, it looks pretty attractive.
I do quickly want to touch on Matthias' comments here, or question. Are you worried about how unprofitable Nebius is? To be honest, no, because we are so early in the journey, in the growth story of Nebius. It's a company that has significant amount of cash at the moment and zero debt. Of course, I fully believe that they're going to raise more cash. So I expect some dilution. Yes, I know that's going to happen. But the fact that they're not profitable today does not worry me because of the pace of growth, infrastructure build out. Ask me this question, I'd say 3 years from now. If in 3 years they're still burning a lot of money, then yes, it's probably going to be an issue. But the way that they're growing right now, I don't think that's going to be an issue, in my opinion.
And Neil, maybe we can hit up on that data center story that we saw yesterday. And was TT Cohen mentioned that Microsoft had canceled about 2 leases, I think, or 2 plans on data centers. First, I don't know if this is a refresh story. I think we heard something very similar um,
From
a few
them,
months ago. Was it? I don't know if this is just a rehash of that same story, and then just kind of, or is this some 2 new data centers? But overall, Neo, even within the note, they mentioned that they believe what's really happening is Microsoft gave up some of its investments that it was going to do for OpenAI. Um, because, like I mentioned, OpenAI just wants a blank check, it wants a sugar daddy. Microsoft wasn't doing it. Microsoft had already planned maybe some of these leases beforehand. But then it's like, you know what? We're actually going to let OpenAI go find a new sugar daddy. And he did it with SoftBank and Oracle. So while they might be canceling those leases, I think it's just a transfer of compute somewhere else. I'm going to guess that compute is the one that's going to be happening with Stargate in that program. So it's 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 eye catching to say Microsoft canceled leases. Um, AI bubble warning. But I think the real story is AI data center capacity is shifting from one hand to another as AI company is using another company to fund its investments.
and actually this wasn't even a couple of months ago. That's the weirdest thing. So I just Googled it. I found one article here. February 25th, Microsoft denies claims it is canceling data center leases from 1 month ago. So a refresh of something that made a lot of noise a month ago, I guess. They're saying here, one moment, let me share this. Where is this? Voilà. Let's put it here. So this year, last year alone, we added more capacity than any prior year in history. While we may strategically pace or adjust our infrastructure in some area, we will continue to grow strongly in all regions. This allows us to invest and allocate resources to grow areas for our future. So again, I don't know why we're talking about this again. Maybe there are some changes since then, but if this was the explanation from Microsoft a month ago, I highly doubt something has drastically changed in a month.
And Neil, I think this is something that is we're going to start seeing a lot more as the data center market is what's super crucial about. But I don't know where I've read it. Again, I don't know if this is a dream, but I feel like I've read it somewhere. That in the data center market, it's not unlikely for them to cancel leases. That for example, they believe that sometimes they expect a region of Atlanta, so they start to grow in cloud space. So they start to plan of maybe building a data center near those hotspots, which are going to need more compute power. So they start to not even make signed contract leases, but start to make at least some discussions that they're going to build data centers in Atlanta or near Atlanta. But after a few months, they end up seeing, hey, look, actually, what's happening there is not what we thought. We haven't signed the lease. We actually are seeing more growth needed in Austin. So instead of building it in Atlanta, they say, hey, look, we had discussions here in Atlanta. We're going to cancel that. We actually need it more in Austin. So it's sometimes it all shifts with volume. And it's something that happens very often in the data center space, but because the AI market is so important, everybody's trying to find that crack in it. And anytime they hear something like this, even though it's happened in the past, this is the first time we're really looking into it so deeply. So we're finding it right now.
Yeah. I mean, and we're going to see this in the next report, in the next earnings call. I mean, you're going to see this in the data, whether or not they've expanded or whether they're canceling stuff. So it's not like something that they can hide from us for that long. I do want to touch on this thing that was released, well, just now. Alphabet tops 2025 most innovative companies list with an AI boost from Gemini and Gemma. This just came out from Fortune. So Alphabet apparently is doing something right. Um, in that list, we also have Microsoft at number 2, Apple number 3. Okay, now
How's Apple number 3?
Yeah, now I'm starting to question this list. If Apple is number 3, then then there is something very very wrong here. But I mean, Adobe and Cisco cracked the top 10 this year, so the list is a questionable one.
Questionable list.
Yeah, this is quite strange. In the top 50, we also have AMD, by the way. I think for the first time. So yeah, I mean, I saw the title, I was like, okay, cool. But then I saw the Apple number 3 and then Adobe in the top 10 with Cisco. I'm like, okay, well, what's the criteria? Because maybe we can be on that list as well. Maybe next year, we just come out with some stuff. Maybe like Robinhood. I don't know if you've seen that, but you can now order someone to get you cash from an ATM, because that's apparently a big thing in 2025. People go to ATMs to get some cash. I don't know.
Yeah, I find that weird. I feel like I haven't looked into it, but it's like, how's the security behind it? If I was someone that's doing that Uber of cash, I would have like so many webcams on me to showcase that, or GoPros to showcase that I actually handed the money. Like, I mean, I have to look at it, but how does that work?
I mean, I don't know. When was the last time you were like, damn it, I have to go get some cash to an ATM? I mean, I get it. I also have cash in case, right? In case I have to pay, I don't know, the cleaning person or whatnot. I always have some cash laying around, but it's not something I was like, let me think of a feature I can add to an app. And I'm like, order cash, like order Uber Eats, no, order cash. I'm like, maybe 10, 15 years ago, that was something cool. But today, yeah, I don't know. Plus, then you can also tip the guy. But I'm like, it's cash, so the guy can tip himself, and I would only find out later on. Who knows?
Yeah, I feel like that's gonna open up a lot of cool stories or funny stories in how that progresses.
Yeah,
Um,
probably very
Neil, we
popular in
got
Colombia.
Ariel said he really missed us. He missed the last episode because of work. We were also late last episode because of Neo, but I was 1 minute late today, Neo, and everybody says it's my fault.
Yeah, but I mean, he did miss last episode. Let's be honest, Ariel, you missed it because AMD was close to 115. Huh? But today you're back because we are at 105.
So let's see. What do we have here? I saw a few questions, but now I lost them. Neil, anything you saw in the market, besides all the stuff that we just discussed, Neil, that we haven't
More
discussed yet?
more tariff talks, right? We get more tariff talks as we get to that. I think, you know what? After April 2nd, I think the market starts to move to the upside, I'd say. Because April 2nd, you get a list of exactly what's going to happen. Now it's every day something else. Like yesterday, suddenly, puff, tariffs on cars made outside of the United States, tariffs on Europe, maybe, etc. Not maybe, most likely. But April 2nd, we will all get a list of exactly what's going to happen. And I think that's what the market is missing right now. Up until then, I'm pretty sure that a lot of countries are calling Lutnick, are calling the president to say, okay, look, let's talk. Let's talk. And they'll figure something out. I think they'll figure something out. It has always been about figuring things out. There will be tariffs for sure. How hard? I don't know. How high? I don't know. But after April 2nd, we are going to get way more information. The market should chill out. But then later in April, we have a new earnings season coming up. And that's going to be quite interesting because I'm pretty sure that last year, 2 years ago, we had an increase of AI mentions in the earnings call. I think now we're going to get a huge increase of tariffs in the earnings call. Whether it's going to be an excuse or an explanation remains to be seen, of course.
And Neil, I think we started to see that more in the late earnings season. where a lot of companies started to give guidance maybe a little bit weaker than expected, and it was mainly due to the uncertainty of what things can happen. And now it's with this uncertainty maybe becoming certain on April 2nd. Um, then I think I agree. It's going to be more of like, hey, look, you gave us a weak guidance last time. What are you going to tell us this time on the things that you know now? But yeah, I think it's going to be a lot of tariff and AI talk in this upcoming earnings, and it's a really wild time, Neil, because like usually after earnings we have kind of like a very quiet time. But this time earnings just followed the tariff talks, and then jumping back to earnings in a few. I think TSM is already doing like in 2 3 weeks their earnings call. So earnings season is starting right back up.
Yeah, I mean, yeah, we're starting. I mean, the first couple of ones are what? Are TSM, ASML, Tesla, Netflix, AMD, I think, are one of the first ones in the first 2 weeks of an earnings season. By the way, did you check on ASML's buyback program more recently?
I have not, so I don't know if we want to pull that up, Neil. I'll try to find it in a bit. But question here from Bike Bike. TSM seems very cheap here. What catalyst do we need to see a rally, or do we expect it to just trade in line with Nvidia? Um, Neil, I think for most part of it, it is going to trade in line with Nvidia, as one of the drivers is the AI revenue. But I think Micron and TSM has also mentioned it, that they're starting to see great tractions on other opportunities. I mean, Micron mentioned it, that maybe the PC mic cycle is happening earlier than not earlier, but it's happening sooner now, where or they're seeing some traction. And I think the consumer space. I mean, TSM at the end of the day, while it is an amazing company, it's still a supply chain company, and the supply chain is run by consumer demand. So if you do see kind of a nice growth in consumer products, that can be a very, very bullish sign, and a very great way for TSM to beat earnings expectations and beat revenue expectations. So I think one catalyst could be a huge turnaround in consumer confidence, which can drive a lot more sales of chips in general.
Yeah, I mean, like you said, like buying a TSM, for example, is like buying the semiconductor market. That's basically the sentiment at the moment, for sure. Very good company, right? Very good company. I mean, without it, we don't have Nvidia at $3 trillion or close to it. Same with ASML, although a bit different, but still same. In the meantime, when you look up the buybacks, let me see here. So did I take any gains from Alibaba? I did not. I did not at the moment, but I'm thinking about it maybe just to add to some other positions, because Alibaba for me has done extremely well year to date. Maybe I'll buy more AMD. So AMD going down, Couch going up. So far, Couch not really going up, but down. We'll see. We'll see what happens. PainPal is definitely painful. Yeah, it's a pain. It's a pain. But I am exactly yesterday's video. I'm still very confident in PayPal doing well in the future. It just so far the market is just punching me in the face and like, no, you're wrong. You're wrong. But I think I'll be right. I think I'll be right. Just a matter of when, not if. And if I'm wrong, then you can come back to this to this stream and laugh.
Yeah. So Leo, here's the update of ASML. And hopefully no one laughs at you, Neil. No one better laugh at Neil. He's my friend. Um, it seems like they're buying back around 320 million euros on a weekly basis right now. And as prices continue to go down, they don't really increase it much, but they're still. I wonder if it's their plan. I think. I mean, the repurchase of total program right now is 35%. I wonder if they're just doing a math to make sure they hit that 100% by the end of this year. I think I think they've mentioned that they need to hit 12 billion. I don't know where we're at, but I know they probably bought more than that. But we can see they're constantly buying here, Neil, and spending about $1 billion every 3 weeks or so.
I mean, not bad. I mean, it at first was what 7-8 weeks of nothing, and then suddenly they started to ramp up the buyback, but then yeah, it stays the same. So yeah, if they like it at this price, I think investors should like it as well, right? It's quite clear that they view their share as, or their stock as undervalued at the moment. And to be honest, it's great value at the moment. And ASML at these prices still very important, even with all the tariffs, all the export restriction, and all of that. I still don't see another company really competing with them, if we're being honest.
Yeah, I agree, Neil. I mean, usually I'm not bullish. Not bullish. I usually ASML and TSM are two companies that I normally kind of go with that approach of they're kind of the semiconductor um, markets. ASML looks pretty attractive, and even TSMC lately for me is looking a little bit attractive. And it's one that I believe can outperform the semiconductor market at these values. So I think there is opportunity here in the semiconductor space. And someone mentioned it. I forgot. They mentioned that TSM. Oh, here we go. Renato, TSM down in 6 months, shaking my head. People only buy it when it's at all-time highs, right? So you kind of get all this excitement. Not from the group here. I don't really see it from this group here, but historically in other social platforms, um, you get everybody wants to buy at the all-time highs, but when stock prices drop, you don't see that happening.
Yeah, no, I agree. And we have some smart folks here in the chat, in the streams. Ariel, big fan of us. Thank you very much. Big fan of you as well. Although I might maybe owe you a share of AMT later this year. Hopefully not, but you can keep coming back each and every week, and we'll have this interaction. But yeah, no, it's true, right? When stocks are high, everybody's like, oh, I hope it dips so I can buy more. Then when it dips, it's like, no, I don't want to touch it. It's a falling knife. It can dip even more. And I'm like, okay, then even if it goes to $1, you will not touch it, because then you will say, oh, it goes out of business. So yeah, that's why I say, if you like a certain business at a certain price, shouldn't really scare you. You shouldn't go all in if you don't want to go all in, right? You can make sure that you can buy tranches each and every $5, $10 or 10% or so. But yeah, all in all, there are definitely a lot of good companies trading at interesting prices. Tesla is holding up quite okay today. Even Netflix and Apple, of course, still Apple. I don't know how they do it, but very innovative
And our
company
friend here,
apparently.
Cyril, Neil mentioned, without, oops, not that one. I didn't want to, it was last. It was, well, I'll look at that one a bit, but Steen here mentions, red days are what makes us rich. And I do agree with this, Neil. I mean, most of my great buys have been when the market has been super scary. You just have to make sure that, hey, look, you have a thesis behind the stock you're buying. You have to have a long-term investment, because sometimes the market, while you could be right, you might not be right on the timing of when things might turn around. So long-term investment, have a great thesis. But red days are what make us super rich. And this is when you start to see those crazy gains in a few years from now. So with patience, with thesis, and with long-term mentality, I think red days are the best for investors.
Yeah, I mean, there is this, probably not the very accurate quote that I'm going to say. During bear markets, you build wealth. During bull markets, you collect. Something like that. Um, Even if that's not the quote, I think it makes sense. Like during bear markets, that's really when you have to start being bullish for the long run, because then you can find mispriced companies that at the moment nobody wants to buy because it's red, but the business is still doing well. Your thesis makes sense. And then you see Meta, perfect example, up 600% since the lows in 2022. Could have seen it coming, unless you believed
And
all the headlines and people say, oh, nobody uses Meta anymore, metaverse, stupid name change, blah blah blah. Okay, but if you dig deep, you see the business. It was a no-brainer, one of those no-brainers, of course.
I agree, Neil. So Mike, just picked up 7 shares of Nvidia. Nice. Um, if Nvidia wasn't, again, for me, it's the biggest thing is Nvidia is such a heavy position in my portfolio. But I think these are great levels. I mean, the AI market, in my opinion, is still pretty strong. PE ratio for Nvidia is forward PE ratios is crazy compared to some of the other Max sevens. Um, we have Brun here mentioned his timely lately has been awful. He punched about his chip stocks literally the day before DeepSeek. Um, I mean, I think there's this story, right, Neil? Even the worst buyer is still when they're in the long term of things, um, buying decent companies or at least the overall market.
Yeah, I mean, it does suck to buy one day and then the next day it's down 5-10% or so. It does suck because you say to yourself, oh, I have to wait 24 hours and I would be buying more shares for the same amount. Fine. That's why I always like grow into your position unless it's like really, really already super cheap and you're like, okay, you know what? Screw this. We're going all in. Um, but yeah, it's not great. But then again, if you're buying for the long run, one day of a hit doesn't really matter. Shouldn't matter that much.
And Neil, I actually like this from Zero. Without crazy amount of overvalue IPOs, you don't have a bubble. AI bubble won't pop for 3 to 5 years. Historically, I feel like that's the case. We start to see more IPOs, more SPACs, more kind of closer to the top. Right now, we haven't really seen that. I personally don't. I mean, maybe I would have expected if there was some crazy bubble right now, I would have expected a little bit more semiconductor companies go public, trying to kind of raise as much money in the AI game. A lot more AI software companies go public. I don't know if I'm just not watching the right signals, Neil, but I haven't seen much of that. I'll tell you, like I think CoreWeave is one of the few that I can think of just these past few months.
Yeah, I mean, it makes sense, right? If you're private and you're seeing how the markets react right now, you might say, look, maybe now is not the best time to go public. But then again, as we've discussed, I mean, the valuation in the private market for some of these AI companies don't really make that much sense. And so maybe they also know that, okay, if let's say OpenAI goes public at $300 billion in valuation, man, I wouldn't be scared of placing a bet that this goes down 50% after, I don't know, a couple of months, maybe a year or so, because it's not worth $300 billion. So yeah, maybe that's why. Because the market's definitely not favorable at the moment for IPOs. I think Klarna also wants to go public. I mean, these companies wanted to go public a couple of years back, but then we had the bear market, and they're like, "Oh, nah, we're not going public at the moment until sentiment changes." Stripe is another big one, but it's also a company that I'm asking myself why even go public at the moment. Doesn't make much sense. So we'll see. We'll see. Ariel asking here about Micron. I'm also, I mean, semi-heavy pun intended. Yeah, Micron is Micron is taking a hit. I think it might even be under 90. No, it's at 90.
Neil, that was really good. I like that a lot. I like that a lot.
Thank you. I am smart like that. Micron is still up year to date, so still outperforming the market year to date, but it's down 6.7% in the last 5 days. It's down, let's call it 10%, yeah, since they reported earnings. I mean, we touched on this a little bit on Tuesday. We liked it. Good comments. Markets at the moment are irrational. So okay, we're back to $90. We're back to $90 levels that we've seen before. So we'll see if $90 holds. But all in all, the company that's the most important thing. They're still doing what they have to do. And if that's the case, then I think we'll be fine.
Yeah, yeah, Neil. I want to say, out of their earnings call and some of the channels that I'm reading, I don't see any new bearish thoughts on Micron. I still think, I mean, we discussed plenty of tailwinds here. The only thing maybe is eventually Samsung will enter into the space, but at the same time, all these other players are going to be developing the new generation of the next generation. So I don't know. I'm very bullish in Micron. I think the market is worried about nothing, and not nothing, but it's worried. But it's they're not understanding the consumer story. Still hasn't even started yet for Micron. When that starts, and they're already kind of the trade off ratio of HBM, that's going to create some interesting pricing discussions in the future. If you don't have that, if supply is not there to keep up with demand, that's when pricing goes into the favor of Micron.
Yeah, no, for sure. And I mean, and it also shows that the market, Wall Street, although everybody wants to say, oh, Wall Street gets it. No, sometimes or a lot of times, Wall Street just does not get it. They think they get it, but then they got it wrong, and things go down, things then go up, price target upgrades, downgrades, price follows sentiment, and I think that's what we're going to see. I still don't expect any huge slowdown when it comes to like HBM or something like that. I mean, they grew what 50-55% quarter over quarter. So yeah.
And Neil, when it comes with these analysts, right, they have to add another factor into their equation, and it has to happen within the next 12 months. So that is a massive variable, in my opinion. And as a long-term investor, you don't have to put that in your equation. Right. If you're looking at that long-term thesis, and because you don't have to put that in your equation, you can look more at the business of where it can go from here, the overall growth story, and you're not worried if or if not is if it's going to happen within the next 12 months. So um, I think that's one of the amazing things that long-term investors have. They don't have that complicated equation of what happens in the next few months.
Yeah, no, I agree. Um, Quick reply to this question: what about SK Hynix and Micron? What's the competition like? So SK Hynix, I think at the moment are still the market leader. Um, Samsung is struggling, so Micron is picking
And
up the pace a little bit.
sorry, Neil, I lost you there for a second, but I think it was my side. But I don't know. I lost my train of thought.
Okay, no, just to say that SK Hynix is still the market leader at the moment, and probably for a long time. Um, this is one. I mean, we touched on that I think a little bit last week. So, are you guys bullish on the recent acquisition of Alphabet for Wiz, the cybersecurity company that they're going to acquire for $32 billion? It is not cheap. It's expensive. It's expensive, but you're getting a company that is, what is it now, 5 years old or something like that, but it's growing extremely rapidly, highly competitive, and it fits what Google Cloud needs. It's not something that, oh, they just bought that, so the other players are going to retaliate or something. No, Wiz's customers are actually Google Cloud's competitors. So now they've got that. So they've got their hands in multiple honeypots, as someone said in the previous stream. So I think it makes sense. It's not cheap, but then again, Google has the cash to do so. So that's fine by me. And then we'll see how it works out. Then we'll see how it works out. Big acquisition, but it's a pretty good one in my opinion. Opens up quite a lot of opportunities for Google and Google Cloud to grow even faster in the future.
Oh wow! First, let me see. So first, Neil, I'm not too familiar with the acquisition, so I don't have much more to share there. Next, this one really got my attention from David Ben. Jose might be happy to know that I got a signature at GTC. That's pretty cool, David. Hopefully, it wasn't on your boobs or anything like that. Hopefully, you can keep it. But yeah, that's pretty cool. Um, Maybe one day I'll show up there. Then Digo also mentioned GPU gaming was down $1 billion for NVIDIA. How much more upside does graphic actually have? Well, HBM3 and HBM4 actually have an impact. So HBM, high bandwidth memory, Digo, is only used in kind of AI accelerators. So like your H100s, your H200, your Blackwell platforms, and the upcoming Rubin. So in forms of the gaming GPUs, you're not going to see HBM there. You are going to see kind of the more advanced DRAM technology, which I believe right now is GDDR7 or 6, I forget, but it's kind of like the leading edge DRAM, and that is HBM. What it will do is kind of create a supply issue with what's going to go on the consumers and what's going to go on the AI accelerators, because to make DRAM, to make HBM, you need to use a lot of DRAM. So if you're looking at HBM, you're more focused about the AI accelerators. If you're looking more at the consumer goods, you're looking more at leading edge DRAM or NAND technology.
Yeah, and I mean, last quarter were they down $1 billion?
I'm not sure, but I do know that right now, for at least this time, they stopped really their selling of the RTX 4000 line as they kind of progressed into making and building up the RTX 5000 line. So that was one of the reasons why it was lower than before. Because if you go to most places, they have low supply of the 5000 and they have no new supply of the 4000 series.
Okay, yeah, I mean, AMD, Nvidia, they're all sold out, so MSRP prices don't even exist anymore, which really is a shame because it's every time the same thing. Do quickly want to touch on that because I've seen BYD the question a couple of times. So to be honest, since BYD is a Chinese company, their reports are quite confusing sometimes. So they're doing very, very well because they've got plenty of models, cheaper ones as well. So they're growing extremely rapidly. With the fast charging one, I saw the announcement last week. I don't know when this is available or how many times you can use it, or it's good to use it for the health of the battery. I don't know, but yeah, BYD is a very fast growing company, and I know people will say, oh, huge competitor for Tesla. Yeah, it's a competitor for Tesla, but I think it's a bigger pain in the butt for all the other automakers out there that cannot make profitable EVs or that cannot keep up with the pace of innovation from the Chinese players.
Not much to add there on my end, Neil. We have a few minutes left. Thomas here. ASML is looking attractive. We kind of talked about it, Thomas, already. Neil, did we? I was bullish. Would you say you're bullish too on ASML right now? Yep.
Yep.
I don't think for me, Neil, the ties to China, any China partnership is really a major concern. It's not like ASML is doing anything crazy in China right now. I think Thomas might be talking about that they recently announced that they're going to build a repair center somewhere in China. China has a lot of old equipment there. So it makes the most sense for them to have kind of an equipment builder. It doesn't mean they're going to be selling any type of new equipment or kind of go against the export restrictions. I think ASML and management is too smart for even doing anything like that. But I think they needed to find a way to make sure that, hey, look, if you want to buy our old equipment, we have hands in ground to be able to fix whatever or keep up the maintenance there. So the China partnership, I feel like, or that Chinese repair shop that ASML is building has gotten a lot of negative press, in my opinion, where I think it just makes sense and it's not anything that should impact any forms of tensions between ASML and the United States and ASML and China.
Yeah, no, I agree. I found it so funny. We looked at SMCI right now. It's still at $35. I mean, after all the drama, you would think that this thing would have been flying higher, but no, nothing. Like literally, I mean, yes, it's up year to date, but it's been around these prices for quite a while actually, since that deadline. Basically didn't move. Actually went down. You see, quite interesting.
All right, Neil, I have maybe one more question, or if you want to take one more questions. Actually, I like this one. I would love to hear Google or Amazon at these price points, Neil. And that's our last question.
Interesting. Google or Amazon? If I had to choose one to buy and own for the next 10 years, I think I've always said Amazon, because you don't really have the headaches of, search competition, this, search competition, that. Like if it's a buy today and lock it up for 10 years, probably I'd go with Amazon. But a Google at these prices, come on. I like it. And again, my phone has to start waking up when I say this. I didn't ask you. Stop. It's every time the same thing.
But Neil, let's say you didn't have to pick one. Would you? Are you both? Are you happy with both?
No, of course I'm happy with both. I own both. I'm
Okay.
very happy with both.
Yeah. Yeah. I think your current prices. I think if first let me do that 10-year scenario you made us think about now. Um, so in that, I think I would pick Google. I don't know. I like Google. I think they're innovating at some nice levels. I like the AI innovation that they have. So I would pick Google for that. But obviously a lot of dependency of like what Igor mentioned. Um, with the Department of Justice and everything happening there. I don't own Amazon, but it's one that if I had more cash available to me and I felt like I felt a happy position in Google and some of the other stocks I wanted to, Amazon would also make the list at these levels as well.
I mean, these are the types of companies where you can really say you cannot go wrong. Like I know, like I said, search dominance, DOJ, Chrome, this and that, but you cannot go wrong with these types of companies today. Like you look at the business, it's huge companies, but they're still growing quite a lot, very profitable. So yeah.
All right, man. I mean, that's a fun hour. Appreciate all the support we have here um, on the channel. It means a lot. It's a lot of fun when we have other things to discuss besides just Neil and I talking. So I appreciate all the questions. And we'll be back Tuesday, right, Neil? Hopefully, no changes. Hopefully, it won't be a 1 minute late that ruins the stream. Um, but yeah, see everybody on Tuesday.
Yep. See you Tuesday. Have a great rest of the week.